Hey everyone, Richard Robbins here. Well, the numbers are in for the Toronto Real Estate Board. Now, the last couple days, I've been listening to the radio and I've been reading the newspapers, and I'm telling you, you think the sky was falling sometimes. And of course, what bleeds, reads. Well, let me tell you, I got some better news for you than some of the things I've been hearing. Now, I am a realist as well, so I'm going to be honest with you with what's going on. But also, I want to talk about buyers right now because buyers need to get off the fence because I think it's the perfect time to buy a house right now. And I'll talk to you about that. So let's have a look. January through May, okay, first 5 months of the year, 4,000 sales, 5,000 sales, 7,200 sales, 9,000 sales, almost 10,000 sales, sales up by 10.5%. Good news, right? Of course, it's the spring. This should be happening. What's happening with inventory? 12,000 listings, 13,000 listings, 15,500, 18,000 listings to 20,000 listings, up by 11%. They're both up by almost the same number, which means your months of inventory didn't what? It didn't change. Now, months of inventory, take your listings, divide the sales into your listings, it tells you your months of inventory. Supply and demand determines the strength of a market. What's happened this year? We started with 3 months. 2.6 down to 2.2, 2, and then 2. And then everybody says, yeah, Rich, but guess what? Of course months of inventory should be less because we're in a spring market. Not necessarily. Think about this. In a spring market, do we have more inventory? Yes. Do we have more sales? Yes, right? So if the months of inventory is remaining strong or going down, that means our market is getting stronger regardless of the time of year. Because you can have the time of year in May where your months of inventory is going to be the same as February because you have less listings, less sales. May you have more listings, more sales. So that means that prices should be going up because 4 to 6, balanced market, right? Below that, seller's market. Average price, 748, 780, 788, 820, 839. Like really good news happening here. So we look at it and say your average price is up 2.2%. over the month before. So this is all really cool stuff. Now, I understand there's micro markets, certain markets not doing as well as other markets. I understand that detached is going to have more months of inventory than the more inexpensive properties. I get all of that, right? So you have to study your market. An example of that, if we go into the 905, is there more months of inventory in the 905 opposed to the 416? Of course. Is there more months of inventory the further you move away from, say, Toronto? Yes, of course, but you got to study those markets, and I'll talk more about that in just a minute. What happened from 2017 to 2019 in terms of sales? We had 10,000 sales a couple years ago, the month of May. Went down to 8,400 last May, almost 10,000 again, okay? So we're not far off what we did in 2017. What about months of inventory? Well, we had 1.8, a little stronger market was happening in 2017. Now keep in mind, 2017, what had happened in April? Foreign buyer tax went in, right? So then we went to 2.4, and then of course now we're back down to 2. So what I see here is I see things starting to look pretty good for the real estate market. What about prices? Last 3 years. 2017, we're at 862, went down to 809. Back up to 839. So things again are all moving the right way. Days in market 11, went up to 20, 2018, down to 19, okay, 2019. Now this year, this is what you might want to use to be talking to buyers because this is a line graph with months of inventory on it. Now, a lot of buyers are sitting around and, some of them are questioning, is it a good time to buy? Should I be waiting? What should I be doing right now? Are prices going down? Are prices going up? If you listen to the radio, you would think prices they're just terrible, right? Well, I look at it and say, I think right now prices are perfect to get into the market. Let me show you why. If we look at months of inventory for 2017, we're 1 month. Went below 1, okay, we come up above 1 right here. Then we kept going up. Well, why? What happened in April 2017? Foreign buyer tax, right? Inventory started to go up, sales started to go down, sort of went along like this, and we ended up right here at about 2.7 months of inventory. So we started at 1, ended up at 2.7. That's determining your strength of the market. What about last year, 2018? We started at 3. Okay, remember, we ended at 2.7. We started at 3. Inventory came down slightly, okay? And then what happened? And here it started to go up. Now what happened in the beginning of 2018? Stress testing, right? So you can see it affected the market. Right? It was up a little higher and we ended up at 3 months. We ended up right where we started at 3 months. What happened in 2019? Let's look at the white. What's been going on here? Do you see what's going on? So what's happening now is our months of inventory is almost to where we were in 2017. Now, what is my prediction? I think we're going to keep going like this. I really do. Which means right now, if you're a buyer, if you're waiting for prices to go down more, I think you're making a big mistake. Think about this. Right now, you can take advantage. Because if you look at some markets, let's take Aurora. Let's take Newmarket. Let's take maybe Stouffville. Let's take areas like that. Well, if you look at the last couple of years, prices are down in some of these markets by 20, 25, 30%. There's no question, right? So if you go back and study those markets, well, when should they be getting in? Nobody knows when the bottom is till it starts to go up. When should you be getting in? When you see, based on months of inventory, that your market is starting to balance out or strengthen, which it is right now. So I'd be showing buyers this, and I'd be saying, this is the time to buy. Rates are good. Some banks have put rates down in the last little while. Unemployment is good, right? So people are working, generally speaking. Our market seems to be starting to pick up a little steam. It's not what it was 2 or 3 years or 3 years ago, but we don't want it to be what it was 3 years ago. We want to work in a market where buyers can take their time and sellers, right, can put their house in a market. Maybe takes them a little while to get it sold. So this is a much better market to be working in, a much better market for buyers to be buying in. And I think if buyers buy now, I'm telling you 5, 7 years from now, they're going to be very happy they made that decision. So here's, if I take the 416 and 905 and compare months of inventory. Detached properties, 416 is 2.1. 905, 2.8, a little weaker in 416. Semi-detached, you got less than 1. Very strong market in 416, but 1.1, very strong in 905. Townhouses, 1.7 in 416, 1.5 in 905. Condo apartments, they both got 1.5. So remember, we're sitting with 2 months of inventory, but we got less inventory in the lower price stuff, and we got a little more inventory in the higher price stuff, which is normal. What about prices in the last 10 years? And I'd be talking to buyers about this too. See, if you go back historically, in most 10-year periods, you're going to see prices almost double. Like go back and look, you're gonna, not always double, but sometimes almost double, sometimes double. So let's look at this. This from 2009 to 2018 would be a 10-year period, right? Prices were $395, let's say $400,000, and where were they in April? They were at $809. So if we're like, $400,000 and we're at $809, that's double, isn't it? Now what happened here, if I take this 10-year period, prices were say $450, to double they'd have to be $900, but they're only $838, so they're not quite double. But again, you can look at all different 10-year periods and look at what's going on, but relatively speaking, in the Toronto market, not all markets, but in a Toronto market, if you buy a house, 10 years from now it's probably going to be double in price or close to it. Maybe it's going to go up by, say, 80%, which means if prices over the last little while have been weakening a little bit and we're starting to see our market start to strengthen because our months of inventory is coming down or staying flat, that would tell me that now is the time I got to get in the marketplace. And 5 to 7 or 10 years from now, I think they'll be very, very happy they did. So get out there, use some of these graphs, have evidence for them so they can see what's going on, educate them as to the right thing to do, and don't be an order taker, but become a salesperson. Help people make great decisions. They're going to benefit them years from now. I'll talk to you next month. In the meantime, remember everybody, it's a beautiful life. Make it count.